Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, May 8, 2009. The big fundamental news today was April's U.S. non-farm payroll report. The release showed the U.S. economy shedding 539,000 jobs during the month, which was better than the forecast of a 600,000 loss. The unemployment rate rose to 8.9%, which matched expectations. The decline in jobs, though, was the smallest in 6 months, though a good deal of the improvement came as part of temporary hiring by the government. Still, the data underscores the perception, by showing job destruction easing, that the U.S. recession is moderating. The better-than-expected U.S. jobs report boosted risk appetite and helped push the euro-dollar pair to a new high for the week. The pair, which was up overnight, jumped about 100 pips in the wake of the release, climbing above the 1.35 area, stalled, and then extended its rally to the 1.3625 area in later New York trading. Stocks in Asia and Europe were higher overnight as the U.S. bank stress test results were not worse than feared, showing that 10 out of the 19 banks surveyed needed extra capital. Today's trading showed the euro extending yesterday's gains after the ECB announced a plan to buy 60 billion euros worth of bonds. A rally in U.S. stocks, especially in the New York afternoon session, helped the pair finish off its rally. In fundamental news from the Eurozone, Germany's industrial production broke a 6-month losing streak, with output for March showing a flat reading. The report, similar to factory orders data from Thursday, is a sign that the recession in the Eurozone may be bottoming out as well, though it's still too early to tell. Germany's exports rose for the first time in 6 months in March, climbing 0.7%. That helped the German trade surplus increase to 11.3 billion euros in non-adjusted terms and remained at 8.9 billion in seasonally adjusted terms. Imports, meanwhile, were up 0.8%, also the first increase in 6 months. In the UK, producer prices showed mixed results. Output prices were up 0.6% on the month, a level that was higher than expected. However, input prices were down 1%, a much bigger fall than expected. That means that even as factories face lower costs for raw materials, they are able to charge more at the factory gates. The pound rose against the greenback after testing support at the 1.4970 level in Asian trading. From there, the pair climbed about 240 pips to set an intraday high at 1.5220 in New York afternoon trading. That broke above yesterday's high as the pound managed to reclaim all of its losses from yesterday's drop in the wake of the Bank of England decision. The euro-pound pair, after surging yesterday in the wake of the ECB and Bank of England announcements, continued its climb today. The U.S. jobs report gave the pair a boost to the 0.8970 level. The pair broke its downward sloping line of resistance yesterday and bounced off an upward sloping line of support today. That could signal a turnaround in the pair following a decline the latter part of April and early part of May. The sense of risk appetite, which weakened the greenback against other currencies, also pressured the dollar against the yen. That is a bit of a role reversal, as the yen has been known to fall when risk sentiment is high. U.S. stocks opened higher, retreated somewhat during the morning, and then surged ahead in the afternoon. Price action saw the pair 75 pips off its intraday high, which matched the highs from Monday. The pair paused and then broke below a short-term upward sloping line of support to reach the 98.70 level. In Canada, the economy created almost 36,000 jobs, a very surprising result considering expectations were for a 50,000 decrease. The unemployment rate remained at 8%. The boost in the labor market would have a very positive effect on consumer confidence and spending, but it's important to note if this is a one-month blip in the data or if the economy starts seeing further job creation in the months to come. The better-than-expected jobs report from Canada was offset to a degree by a bad 20% monthly drop in April housing starts. Starts fell to an annual pace of 117,000 from March's 147,000. A weak housing market may add to another decline in GDP growth in the second quarter. The U.S. dollar-Canadian dollar pair took full advantage of today's better-than-expected jobs reports from both the U.S. and Canada and higher equities to push down to the 1.1515 level. That's a 200-pip move compared to the open. The 1.15 level is support from last November, and a break below that level, coupled with further risk appetite, could send the pair lower in the weeks to come. Next week, key U.S. releases include trade balance data, retail sales, and producer and consumer prices. Other important releases include UK's claimant count and manufacturing data, Canada's trade balance, and Eurozone flash GDP for the first quarter. And that will wrap up our coverage of the Forex markets for this week. Thank you for joining us here at CMSFX.com. And from all of us here, have a great weekend.